Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Interesting trading session. When I first booked this session, we had all these news items lined up. We were ready to rock and roll with some economic data, some fundamentals, get you prepped and ready for U.S. NFP, and they announced the National Day of Mourning for the passage of President Jimmy Carter was going to be today. So our markets are closed, which put me in a sort of a precarious position. I was trying to film a video on an opening range breakout strategy that many of you might like to trade for U.S. equities. Not just U.S. equities, but that was the crux of it. And I had my trade all lined up, and I was ready to rock and roll on the E-mini S&P 500 futures, and ding, ding, nothing happened. And I went, oh, darn it, it's a National Day of Mourning. So I did hear it yesterday, but I forgot all about it, just like you guys. So I do apologize for that. We're going to do something a little bit unique. We've got another trade that's live. I'm not really too pleased with the way that it's going. We didn't get a big enough washout on that Kiwi, but I'm going to recap that. We're also going to take a look at the crude oil trade that went live the other day and really talk a little bit of strategy, talk some markets. I got Bitcoin. We have an interesting strategy set up in Bitcoin that I want to point out, really on the back of yesterday's 9 EMA workshop that we did. So I'm going to get into that. We're also going to do a news scan, fascinating news cycle. We're going to take a look at some interest rate expectations, and we will cover any market that you want to cover. If you guys want me to look at anything, if you want me to look at platinum, I'll look at platinum. I don't care. So whatever you guys would like to do today, pretty much we can do. I do have some things that we need to go over, though. I want to get up and running and sort of do some trade recaps. That's something that we're going to be doing more of this year, if for no other reason than to really show the mechanics of what we're trying to do here, and that's become consistent and profitable. That's the goal at How to Trade. All right, good to see everybody back in the room. Bobby Bob, always a pleasure. Bobby Dibble, good to see you, Dibble. Welcome back. JC, yep. Hey, Shane, the Forex is open. Yeah, the Forex is open. We're going to look at any pairs. If you got any pairs you'd like to just drop them in the live chat, I'll go ahead and look. I'm going to start with the Kiwi. Then we're going to work through Bitcoin. Then we're going to look at U.S. oil. And then we're going to go with gold. After that, I can pull up some cross pairs. I can pull up some majors. I do want to look at that dollar yen, though, because I do believe we're going to have a secondary buy, even though our buy signal from earlier this week didn't quite pan out the way that we thought. Lita, good to see you, Lita. Always welcome here. Okay, guys, let's go ahead and get cracking. If you need to trade, if you need an out brokerage, check out Switch. They've got a bunch of New Year's specials going on. Not a bad place to go if you need to get some market access. Also, if you're in the United States and you don't have access to Switch, Switch does not service us here in the U.S. Take a look at our other broker, Owanda. That's not a bad place to really take care of your Forex OTC trading needs. And if you're trading futures and you need a place to trade there, I don't take money from any futures brokers, so I won't endorse any, but I will point you in the right direction, at least tell you a few of the accounts that I have open. All right, trade follow-up. Let's get started here. The Kiwi. Kiwi sell on the horizon. Essentially, this was a breakout trade. We were looking for about 29 pips, and we wanted to really sell that blowout beneath the 2024's low. Really a big-time level, a key level right around 55.87. I wanted to get in there and take that trade and see exactly what would happen underneath there if we would get a big washout. We did get a washout, but it wasn't as big as I wanted, and that's one of the toughest things about writing up trade ideas and but really putting them out to the public is it's tough because there's, what would I do here? What would you do here? How would we manage this? Or do we just let them run? And unfortunately, print, I can't just get in there and say, well, change it real fast. So we're sort of stuck. We got to dance with the one that brought us. And right now, I'm disappointed because we didn't miss our profit target by very much. And there's really no reason to be taking a loss on this trade, but we are down about 10 pips. Fight's not over. The fight's not over here, but you can see that was our sell. We were looking at 86 sells, got that nice big washout. I mean, we were looking pretty darn good during that overnight session right after that right after the Japanese Open. But right there, your washouts, your lows, about 55.72. All right, that's fantastic. We were looking for 55s. So that would be our profit target. Now we're still in it. We always set these up with a 1-to-1 risk versus reward. So if we're looking at a 29 tick risk, something like that, I believe it was somewhere in there, 29. So you'd add 29 onto 86. So theoretically, we're in this trade until about 56.10, somewhere in there. But I got to tell you, it doesn't look very good just because we have NFP coming up and we have real low liquidity here in the United States. Now, one thing that does sort of support our case is this right here. This isn't too bad, is it? oversold territory, 920 EMA crossover, or excuse me, overbought territory. So we're looking to sell. I get that wrong every time I say it. My apologies. But in any case, we're in overbought territory right there. And that was back on Monday. And then we sort of trended higher and higher. And then right there was our sell. Our sell set up really beautifully. There was your crossover. Your 9 crossed under your 20. We're established. So our sell is, probably a little bit better market, a little bit better trade location than what I put out there. But a 56.19, you already got a real nice move. Still, we're not really seeing any rotation back up. And judging with our other trade, our stop loss is going to be right in here somewhere. Are we going to get stopped out? It's possible. Is this still working in our favor? Yeah, it is. So I'm optimistic that we're going to get a little bit of a runner, but with US NFP tomorrow, that is the biggest market driver this week, and I fully expect an absolute light show. I expect the markets to be all over the place. I expect equities to be all over the place. I expect Forex to be everywhere, and I do think that we're going to have an opportunity to trade, and that's what we're going to do. We're going to rock up early tomorrow. We're going to get after it. We're going to do some scalping, some high-impact scalping live, and we're going to see exactly what the first jobs number of 2025 has to offer. So I'm looking forward to that as well. Let me see, Jay. USD-CHF, absolutely. Let's go ahead. I'll give you my opinion on it right straight away, and then we can go ahead and maybe throw it on some of these other charts and see what some of the strategies say. The Swissy is one of my favorites. I really like it because it doesn't necessarily move, but when it moves, then you get into some pretty good stuff as far as trends go. All right, this is one of the reasons why I always pull up long-term levels. Most people don't even look at weekly charts and monthly charts and things, but it's very, very important. We did a key levels video out. I've recommended it probably 1,000 times to people. It's very important that you understand markets have memories. And you got to understand where these levels are, and a lot of folks don't. You get caught up in a 5-minute or a 30-minute chart, or we're sitting in there trying to trade 4-hour charts, and we forget where these I call them hammer points. I mean, they really are. I mean, that is when the rubber hits the road, the buyers hit the sellers hit the buyers, and then you get a break one way or the other. What I'm seeing right here is a double top straight away, weekly double top, and that goes back to October, and then you had another challenge of that level realistically in April. So what do you got? October 2023, April. So that is a serious zone right up around 92.44. That area right there is 92.24. So I would say, remember, I mean, when we're looking at support and resistance levels, it works against us if we're too accurate, meaning if we're at 150.8 or 150 in 3 fractals. What you want to do is understand that areas are key. You could say there's resistance between 92 and 92.50. I would be a little more conservative. I would say probably 92.25 to 92.50. That's going to be pretty big resistance. What can we do until we get to resistance, though? We can buy it. So clearly we're in an uptrend. This is really a beautiful move, nice 5-week move. Got a little hammer there, inverted hammer. A lot of folks look at those as being potential reversal candles, including this guy right here. When I see a hammer, immediately I'm thinking, okay, if we trade beneath that hammer, we could definitely go lower. Didn't happen. Market blew up last 3 weeks. We've just been rocking higher, and that's because the U.S. dollars, the dollar index is up around 109.25, and that ties into our interest rate expectations, which I'm going to cover in just a second. But you can see right here, nice big move. So what do I want to do? Let's take it right down. Let's take it right down to our daily. Do we have any way that we can get long? Not on our daily. How about our 4-hour? Okay, we got compression. No real break. I mean, it's going to be tough to get in this one from this current level. So what I would recommend is I would dial this back to a daily, and for early next week, I would really be taking a good look at maybe off of today's high, right from this low. And then I would be looking to buy a retracement zone. Now, the question is, do I want to buy a 38% or a 62%? To me, it depends on really where we end up. But, boy, if we end up, let's say we trade higher, maybe up to 91, 91.45, maybe 91.35, wherever, I'm very, very partial potentially to having the opportunity to bid 62%. The back end of that golden zone has been very good to me over the years. But if you wanted to be aggressive and get involved early in the week, you probably could be bidding somewhere right there around that 38%. Now, if we do trade down from current levels, this is what the current retracement wave will look like, 90.84, something like that. That's probably where I would want to buy. So sort of an interesting thing we're going to do right now. I don't really do much of it, or we haven't done it. All right, let's take a look at the Swissy on the 4-hour using the 920 EMA. What do we got? Okay, we were in oversold territory, oversold. Right there would have been the sell. based on overbought territory, overbought. We want to sell when we're overbought. My apologies, guys. It's Thursday. I'm already getting ready for NFP tomorrow. But you can see right here, we're in overbought territory, and that was back on, let's see, the 2nd of January last week. So there was your sell. Your sell would have got ugly. You would have got chopped out of that sell, and now we're sort of grinding higher. So do we want to sell up here? I would say potentially, but I think you want to be doing it right up in there, right around 92 and a quarter, somewhere between 92 and a quarter and 92.50. Pretty darn good looking sell, and I think we'll have an opportunity to trade that one. Let me see, Jay, I've looked at the key levels video. What do you call it, and what date was it made? Let me see. You need a search function. No, that one's on our YouTube channel. So go to How to Trade's YouTube. Check it out there. That key levels video is right there. You can't miss it. We've only probably got, 30 or 40 videos on there. Just cursor down, look for key levels, and we really show you, the idea about how price behaves at key levels. It's really the backbone of what I personally do in the markets. I think if you don't know your key levels, you're in big trouble. But that zone, don't forget that zone if you're trading the Swissy. I want to buy it right now, but would absolutely love something like this to get a sell from 92 and a quarter to 92.50. Maybe we get there tomorrow. Who knows? NFP tomorrow is going to send the Forex really directional, very, very directional. All right, let's see. We had a couple other things that we needed to go over here. The second thing that we probably should recap was our trade. We've got that. We'll keep you updated on how that Kiwi pans out. But our big winner this week, and really the big winner for the year, has been the U.S. oil short. I mean, we nailed that. We nailed the top of that. That's fantastic. It was a great way to start the year off. I felt really great about it. And as of now, it's hit the 1 to 3 risk versus reward, which isn't really what I like to do. But a lot of you love 1 to 2s. You love 1 to 3s. Well, we hit a 1 to 3, which is a pretty big payoff pip wise, about a couple dollars, calling the actual market, because we did trade underneath 73, which was absolutely fantastic. Since then, we've bounced in U.S. oil, and we're up about 1.25% today. It's sort of the market that just won't die. You saw the big sell-off yesterday. Maybe we got lucky on that one. Maybe we didn't. But what you can definitely say is this. We've got a bullish market here in WTI crude, and it's something that has me very, very concerned. And the reason why I'm concerned is it's the winter time here in the Northern Hemisphere. We should be seeing WTI crude trading off, and we're not. That's a bullish formation. That's a nice daily uptrend. Compression, break from 70. And what are we doing? We're getting compressed right around 75. And that really screams to me that we're going higher. Now, how can we be going higher when I could build the bearish case? I mean, it's a pretty darn good case to the downside of this oil market, at least, over the next 24 months. I can't tell you why oil is where it is right now. I don't know. I just know that it's trading higher. I think that the biggest reason right now that crude oil, at least WTI, is where it is we still have hot wars going on globally, several of them, kinetic wars, but we also have shortages. And in the United States, we showed, at least I was reading it during the overnight. I couldn't find the article to re-show you, but it was the lowest levels of U.S. supply in Cushing, Oklahoma that we've seen in a very, very, very long time. And I've sort of been charting that, and we're about 6% below the 5-year average right now seasonally. That's not good. We also remember that we sort of gutted the petroleum reserve, the SPR, and that was never refilled. There's an oil shortage here. Now, most people believe that's going to be drill, baby, drill, and commission these pipelines like the Keystone and get a tremendous amount of U.S. oil to the market. That's going to be Trump's number one idea that will mitigate inflation. I don't know that it works. We just got to wait and see. But you've also got a potential trade war with China of course, with China. That's going to happen probably in T-minus 10 days when Trump gets in. It's going to be one of the first things. Tariffs are going to go down immediately. But with Canada, remember, Canada exports a tremendous amount of oil to the United States. So if you can't really make up the production and get the oil to the market, and you're going to have a problem maybe importing it from one of your biggest importers, you're going to have issues. You're going to have big issues. So to me, I'm looking at oil, and I think there's problems. Not to mention, we haven't even talked about interest rates. Higher interest rates mean lower commodity prices. We're not seeing it. This WTI market has me a little bit scared. Even though it's drill, baby, drill season and all that, I can see $100. And I've been able to see it the last 2 years. It just hasn't happened for us. For me, though, This is extremely bullish. So if I'm trading WTI right now, I'd love to bid 72.66s, or excuse me, 72.66. If we do get another big rush, a big sell-off, we've got an opportunity to step up and bid that with some confidence. And if in fact the damage gets really bad and we sell off maybe down to 71.05, then you've got a chance potentially to step up and buy with a lot of confidence the back end of that daily golden zone. On the flip side of it, is there any topside resistance? Anything we need to worry about to the top side? Well, there's always resistance. But the biggest thing that I would stress with this oil market is it's flat. It's relatively flat. I mean, we can go back on our monthly chart and take a look at 2024's range and realistically where we're trading right now with respect to 2024's high and also its low. And you're right there at about 73.70, which is 38%. We've also got a 13-month EMA right there, which is my favorite, the 13 EMA, 74.61. Brian Barbie, good to see you, Brian. Welcome over there in YouTube land. Always a pleasure. But that right there is an interesting type of a dynamic because you're long-term, you're sort of bearish, but the market's been flat. It's been crazy. I've got reasons to bid it. I would love to sell it. We just don't have a sell. So if we do see a massive, maybe something breaks, maybe see a terrorist attack somewhere, God forbid. But if it does happen, 79 is a great short. We just got to wait and sort of buckle up. Now, remember, we're going to be going into spring seasonality. I always say this in January, but about 6 weeks towards the end of February, we're going to start we're going to start bidding crude oil in anticipation for the Northern Hemisphere spring and summer consumption months. We'll cover that when we get there. We're not there yet. All right, everybody. Let's see right here. Here's our calendar for this week, week 1, full week 1, 2025. Thursday was weekly jobless claims. You know, it is what it is. Today's a national day of mourning, and that really is the number one market driver out there. Did we have anything else today? Not really. Not really. All-day holiday right there is a national day of mourning for Jimmy Carter's passing. You also had a few bill auctions, a few T-bill auctions. They very rarely shut the bond markets down just because they always like to take it. I always think of bonds as just a way to convince you to give them your money. That's how I think of bonds. Stocks, you know, if you buy a stock, they give you a certificate and you own the stock or whatever. Or they used to. I guess if you buy it on Robinhood, you don't really get anything. You get an email. But, you know, bonds are something different. Everybody always needs money, everybody, and the government's no different. 4-week T-bill, you saw those yields tick down a little bit. You also saw the 8-week bill tick down. Well, stayed relatively the same, which I would say anytime these interest rates aren't ticking higher, it means it's a pretty good victory. Victory for those that believe in dovish policy, which I don't think we're getting. Atlanta Fed GDP now, who cares? It doesn't matter. Okay, this is Bitcoin, though. One thing that does trade, even during market closures, is going to be Bitcoin. Bitcoin has been the story, by far the story of 2024 and 2025. It's starting off. It's definitely showing some volatility. This is a good look at our 5813. We're going to have a video out on this 5813, hopefully relatively soon. It just depends how much time we have. But you can see that's a clear-cut sell. On the RSI, you're in overbought territory. What happens? The 5 crosses over the middle one, the 8. The 13 is key, though. I got that question a lot about the triple moving average video going, well, why even have the longer term moving average? That's your anchor point. That's your confirmation. Now, we're using double confirmation theoretically. We're using RSI to tell us what to sell. We're also using the crossover, but take a good look at that. That baseline, that long-term 13-period EMA, my favorite, that 13 is really telling us that, yeah, price is bearish. Your sell would have been right there at about 97.9. That's a nice trade. So if you're trading Bitcoin futures maybe or Bitcoin derivatives, you'll have an opportunity maybe to get on the short sides of these markets as well. But we're not really seeing that gusto that we saw at 100,000 really hasn't really developed here in quite some time. You see right there, we ran up, we hit 100, retraced, broke above 100. Life was good on Monday, and then life's been really tough the rest of the week. Lots of talk about tariffs, lots of talk about hawkish policy, and that's driving your crypto down a little bit. It's driving Bitcoin down. So for me, when I'm looking at something like a Bitcoin, I'm thinking, okay, what do I want to do? I want to buy it. I'm still extremely bullish. The story about the Trump administration potentially buying 500,000 Bitcoin for a national reserve, that's a leading step from governments. Well, I mean, the leaders were El Salvador. They got into Bitcoin, and that's their national currency and all that jazz. But if the United States jumps in and takes a huge stake in Bitcoin, you're going to see pretty much all the other governments in the developed world follow suit if they haven't already. Interesting stuff for Bitcoin. It definitely all spells towards the bullish side of the market. It's something like this. Spike low, spike high. What do we get? we might get an opportunity to buy this thing. This is a monthly chart. You get a washout beneath 91.3, and we are right there. You get a washout down there. You get an opportunity potentially to bid 85,873. So something like that could definitely be very good if, in fact, you're interested in playing Bitcoin maybe this weekend or maybe in the next, who knows? I mean, that's about another $6,000 down the queue. But if we do wipe out last month's low, you're going to see more bearish price action. That could definitely be a bid. If you want to wait for everything to clear up, there's nothing wrong with that. You got a great level down there, 62% back into the golden zone, about 72,000. But you also got that 13-month EMA, which is one of my personal favorites. The monthly EMAs are tough to beat. 69, 439, and that area between 72 and 69 would be absolutely huge. Right now, we're trading 92, so the market would really have to fall apart. I don't believe that we're going that low, but if we do, we got a great buy. And, of course, if these things develop maybe later this spring, then we'll have an opportunity to make a Bitcoin investment potentially. I could see this market trading down to 62, washing out all the retail longs. And typically, if that is to happen, that's when your governments, your Goldman and Sachs, your BlackRocks are going to show up, and they're just going to take all the chips off the table. You couldn't beat a bid like that. Nobody wants to wait, though, and I hear you. We got to trade to make a living and earn money. So we'll look at some intraday stuff as well. But that right there, that's an investment play. Can't give investment advice? That's pretty good play. And it seems obvious right now. Yeah, no kidding, Shane. We're trading 92. Of course we'd buy 72s. I'd say, yeah, but when the price gets down to 72, ain't nobody going to be buying Bitcoin. It's going to be every news story is going to be Bitcoin's dead, Bitcoin's dead. That's why we're ready. We're ready to roll when the price comes our way. Be a forward thinker. If you're going to trade and be in these markets, be a forward thinker. I know we use a lot of historical data to sort of prove our points and show the concepts, but always be a forward thinker. That's why I use the approach that I do. Doesn't lag. Tells me what price action's doing, gives me levels, then we got a shot. Something to think about there if you're interested in Bitcoin. Okay, let's go. We got a sort of an active news cycle, unfortunately. We're going to go ahead and cover a few events that are no fun to cover, but just because I was watching them live on TV last night, I couldn't believe it. If, in fact, you are in the LA basin or if you've been sort of displaced by the epic fires there, thoughts and prayers. Stay safe. I watched the Hollywood fire last night kick off. I mean, these places are famous up Mulholland Drive, up in the Hollywood Hills. I mean, I actually watched the fire start and then grow, and you sat there and you couldn't believe what you were seeing. I couldn't believe what I was seeing. I mean, it really was threatening the city, and everybody sort of bailed out. And the problem is there's not enough resources to fight all these fires. The preparation is questionable. I could, living up here in Montana, we deal with timber, we deal with controlled burns and forest management and all the things that you really need to sort of do so you don't get fires that are out of control. And a lot of that's not done in a city like LA, where the brush outside of town. I mean, if you've ever been down there, you've seen the mountains. You understand that, when those Santa Ana winds come up off the desert and they're blowing hard and it's dry. I think they had like 8% humidity last night, and the wind was coming in down out of the north. So it wasn't coming off the ocean. It was unbelievable to watch. If you guys are there, thoughts and prayers. If you saw what I'm talking about, then you know what I'm talking about. But in any case, that's really huge. Now, one of the things that a major catastrophe like that will do is it's going to bring a bunch of insurance settlements to the forefront. It's a big deal because insurance companies own stock. Insurance companies own things like gold. They own assets. They own mutual funds. They do all these different things with your premiums. I pay them $25 or $50 a month or whatever you guys pay them, and we pay them for whatever insurance, so auto insurance, renter's insurance, home insurance, property insurance. Those premiums go into a pile. The insurance companies invest the premiums. They make the money. The idea is they don't have to pay out as much as they take in, and they make money on those investments. The problem is when you're looking at something like billions, I mean, this is going to be a multi-billion-dollar type of a thing that they're going to have to pony up to these homeowners. If, in fact, that's the case, you're going to have to liquidate holdings. That could potentially send stocks down. Could also potentially maybe send gold down a little bit, but it also may send gold up. Because right now, if you get a bunch of gold that hits the market, it's getting snapped up pretty quick. And maybe, just maybe, that'll just create liquidity, meaning some of the big players will get liquid. They'll start liquidating their assets. You would think that would plunge the market, and it may give you some short-term selling. But there's so many bidders out there. I got a great message yesterday. It was telling me how much gold China was buying. So as soon as that gold hits the market, it's probably going to get swept up. long story short, the volatility could send this thing higher. And definitely catastrophes, national disasters, send gold higher. So in any case, something like this, you've got a nice big bullish move this month on gold. Remember sort of our strategy that we had put out. We wanted to play a breakout beneath last month's low. I think we may have to qualify that and maybe play a breakout above the high. I don't know, though. I'm really worried that this level, or excuse me, this market's going to be really toppy up here around that 2-month high. I don't necessarily know if I want to go long and bet that we're going to make fresh all-time highs right now. I think I would much rather sell beneath last month's low, but it doesn't look like that's going to happen. So we're definitely going to watch that. As far as, the macro look at gold has been the same for me forever. Buying dips, no question about it. If we do get a chance at about 24.81, yeah, we take that all day and twice on Sunday. But what do we do right now? Do I want to buy it aggressively? Not really. It's just sort of a wandering mess. We did have a daily W set up. There was a sell-off, pullback, bottoms inside the Bollinger. There's your break. There's your break. So you could be holding longs with a daily W. As far as what do we want to do right now? We've got a 3-day winning streak, a 4-hour trade. Is it a good idea? I'd stay out. I'd stay out right now. We sort of already missed the move. You could have got maybe a little scalp right there, but something like that. 26.64. 62% back into that golden zone. Very tight range, 26.78 down to 26.55. Very, very tight, $23. Came right down to 64. That's a beautiful trade. You've already bounced about $7, but that's over with. So going into NFP tomorrow, U.S. non-farm payrolls, what can we do? Best thing I can recommend is understand your long-term anchor points. So let's go to our weekly chart. You can see that weekly, it's just been ugly. Look at that. Hammer, it's a short hammer. Short hammer, inverted hammer, doji, traded sort of that megaphone, traded both sides of that doji, and now are we breaking out? I don't think so. So there would be a couple levels that I would be watching very, very closely right now going into tomorrow's non-farm payrolls. Number one would be your all-time highs at 27.91. I don't think that we get there. But the other one right there, I'd be looking at that spike high right there, December's high, which is right around 27.26. I'm tempted to put a trade idea as a breakout above that zone. I just don't know that we get it. I really just don't know that we get it, and that's going to be one of those things that it's going to be a challenge for us to play a breakout there. I don't think I'd do it. So be very careful if you're trading gold right now. I expect a holding pattern all the way really through tomorrow's U.S. NFP report. More news. Get used to this. This is going to be uncertainty, but the news coverage already, Trump readying to close 100 executive orders, okay? Wildfires rage, Trump, it's all Trump. Trump, the American first candidate, new imperialism. This type of stuff is going to be front and center every single day on every single move. Now, can it impact the markets? Theoretically, yes, it can. If there's enough negativity in the markets, so what's going to happen? What's going to happen with the tariffs? The tariffs are going to get some of the worst press coverage you're ever going to see. They're going to say it's going to lead to inflation, and they're going to say it's going to crash the markets. Now, for us, I don't believe either is the case, but I do believe you're going to see some bearish pressure. You're going to see some bearish pressure on something like the US 30 just because higher interest rates are a byproduct of inflation, and if the tariffs are causing inflation, what's going to happen to our interest rate expectations? They're going to go up. Now, I don't believe the Fed's going to cut for quite some time. You can see right here, 29th of January, we'll be in the saddle. That's about 20 days from now. We'll have FOMC live for you. 4.25 to 4.5. We believe there's a 93% chance. We're holding rates firm. I fully believe that. Let's take a look at when can we realistically expect the first rate cut this year. We're not pricing it in until June. And that's pretty much a quarter-point rate cut. That's a long time. That's 6 months. What happens to our markets in 6 months? Well, I mean, if you want to take a look at the macro, look at maybe something like the US 30. We have a trade idea out. We haven't quite got it just yet, but I believe that we maybe as early as tomorrow if we get a big sell-off. Spike low there, spike high, 38%. Are we bullish or bearish? Right now, today, I would be bullish just because that 38% level is a big deal. So if you wanted to buy, you could do it. I'm waiting for a better deal, though. I'm waiting for last month's low to wash out, maybe some of these interest rate expectations to really start biting into market sentiment. Then we get an opportunity down there around 62%. And that's a trade idea that we had up. I'm relatively confident that one's going to come into play. We just got to wait and see how it pans out. once it gets there. So that's pretty much what we're looking at for today. One last recap on this Kiwi trade. It's not going real great, but I'm not too worried about it just yet. We took a little bit of a peek beneath that low. We were looking for about another 17 pips on the washout. Looks to me like we could, in fact, get stopped out, which would probably be somewhere right around that swing high. I believe we're right around 56.10 on a 1-to-1. You can move your stop back if you want. I don't recommend doing that. Or you can just exit right now. We just didn't quite get enough follow through. Their 86 went down to 72. It was about 14 to 15 pips. We just didn't quite get the big mover and shaker. I expected a much bigger washout than that, at least down to 50, 55. Didn't get it. All right, everybody, I want to thank you for joining me today. Tomorrow, we're actually going to be on twice. I haven't put the other stream in the schedule just yet, but the other stream is going to be available. It won't be on the How to Trade TV channel. It's going to be on the Forex Signals TV, so we're going to go ahead and do that. That's going to be a 10-minute trading blitz. About an hour and a half after NFP. So we're going to do NFP live. Be sure to show up right here. We're going to go through non-farm payrolls, see exactly what we got cooking, what the numbers say. Then we're going to go through some live scalping. We're going to look at some of these 5-8-13s. That's definitely going to happen. Then we'll maybe a 920, maybe a 9 EMA strategy as well. And then we're going to go ahead and plug into some Fibonacci's and some anchor points. And we're definitely going to be sort of cheering for this Kiwi trade, although it doesn't look real great. All right, everybody, I want to thank you for joining me yet again. Remember, National Day of Mourning. Don't get crazy with your risk today. Tomorrow's the day that we want to be in it. We want to be in it tomorrow. So, you're not supposed to take days off, but take the rest of the day off. You don't need to be doing this unless you're trading crypto. Now, if we get that sell-off in Bitcoin, all right, then it's guns up. All right, Dibble, great to see you. Thanks for coming back, and have a fantastic session. Get ready. Get ready. NFP's no joke. Tomorrow's going to be a big-time session after a market closure. Absolutely. All right, everybody. Have a great session. Talk to you later.